Welcome to the deep dive. Today we have a uniquely specific assignment for you. We are locking our entire focus to one single 24-hour period, Sunday, December 28th, 2025. And it turns out this one day, it acted as a profound inflection point in the story of AI.
It really did. If the last few years were all about, unbridled capability, this race to see just how powerful models could get, this day marks a real pivot, a pivot to constraint.
Constraint.
Yeah. We're now seeing the entire global AI ecosystem start to grapple with three major pressures. We're calling them the triple P policy, power, and the psychology of how humans and AI interact. The era of just unchecked scaling is over.
So our mission for you, the listener, is to give you a quick but thorough understanding of these shifts. We've pulled the most vital nuggets from the source material. We'll start with new research breakthroughs, then we'll hit the huge infrastructure and power bottlenecks, and we'll wrap up with the global policy push that really signals a different 2026. So let's unpack this. Let's get right into the lab.
Sounds good.
When we talk about constraints, efficiency is always the first challenge, and, well, nowhere is that more obvious than in autonomous driving. Our first source takes us to China. XPENG and Peking University have introduced a really fascinating new framework. It's called FastDriveVLA.
Right. This is a visual token pruning system. So for anyone unfamiliar, visual tokens are these little snippets of image data that a self-driving car's vision model has to process in real time.
Which is incredibly slow and power intensive.
Exactly. So FastDriveVLA is designed to focus only on the essential visual information. It helps the AI drive more efficiently, almost like how a human driver selectively focuses their attention.
And the metrics, they seem to confirm they've really cracked a key part of this efficiency problem. A 7.5x reduction in computation.
That's the key number you need to remember. They got there by cutting visual tokens by about 75%. They shrunk them from over 3,000 down to just 812 on the New Scenes benchmark. This is a huge breakthrough because it means you can dramatically reduce the size and power needs for the onboard hardware. And that makes deploying level 4 autonomy significantly cheaper and faster.
Okay, so that's efficiency in the physical world. Let's switch gears to theory, to how we actually understand these models. There's a fascinating paper on RSCTIF by Nathan Callis. It proposes that your large language model is secretly a single index model.
And this is moving us from just engineering hacks to fundamental theory. A single index model is a concept from statistical learning. Essentially, it means that instead of seeing an LLM as this giant unknowable black box, you can simplify its function down to a single structured mathematical expression.
A single index model. Okay, for the listener, what's the practical implication here? Does this actually make alignment easier, safer?
Exactly. It takes that black box of LLM behavior and gives you a simple mathematical lever to control it. And why this matters for our triple P theme today is that it offers new, statistically sound methods for preference alignment. This helps make our primary safety tool reliable enough for, say, high-stakes clinical or even defense use. It grounds the model's behavior in predictable theory.
Right, increasing reliability. Okay, continuing our global scan, we got an update from Wiley on AI adoption rates in scientific research. And we're not talking about, office software. This is AI integrated into hypothesis generation, core data analysis.
Yeah, and the figures here quantify a massive shift in scientific momentum. China's leading at 59% adoption, Germany's right behind at 57%, and both are way above the global average of 44%.
So this points to a national strategic push.
It has to be. These two countries are using AI agents to accelerate discovery and scientific output. They're integrating AI into the core of scientific inquiry much, much faster than the rest of the world.
But adoption doesn't mean universal belief. At the Chaos Communication Congress, an expert offered a really scathing critique of the healthcare hype, specifically challenging that claim that AI could replace 1/3 of hospital staff.
The criticism was sharp because it focused on what they called the reality gap. You have this utopian tech vision of making doctors 10x more efficient. But the critic pointed to Germany's 2-decade struggle just to implement working electronic health records. The point is, the physical reality of legacy institutions will always create friction. And that friction stops AI from scaling as fast as the technologists promise.
A pushback against the psychology of the hype.
A powerful one.
And finally, in research, a major review paper advocated for a shift in how robots and humans physically interact, moving away from just verbal cues to something they're calling emergent embodied dialogue.
This is for physical human-robot interaction, or PHRI.
PHR.
Right. And this is critical because AI isn't just on screens anymore. It's moving into physical bodies, humanoids. The paper argues that for safe operation, robots can't rely on language alone. They need to evolve communication styles based on haptics, forceful touch, pushing, pulling, and biometric signals. This is paramount for future safety as humanoids become more common in factories and homes.
Okay, let's shift to how agentic AI is moving into these high-stakes, mission-critical systems. Let's look at Waymo. Details came out on their testing of a Gemini-powered AI assistant inside their robotaxi fleet.
Right. They're using this assistant for general knowledge, for complex routing, all through a natural voice interface. But the crucial insight for you is this system prompt. It's this complex 1,200-line prompt that's intensely focused on safety and guardrails.
So it's not just a friendly chatbot.
Not at all. It's a carefully engineered system. It's structured to make sure the AI assistant can never contradict the vehicle's core driving logic.
Yeah.
It's a perfect example of embedding policy constraints right into the code.
And meanwhile, that integration of commercial AI into military capabilities continues. We saw a new analysis on China's AI-powered logistics system for the PLA.
The PLA Joint Logistics Support Force. Yeah. They're calling it Smart Joint Logistics. It incorporates AI planning, cargo drones, and unmanned ground vehicles, or UGVs, things like the Mule 200 for autonomous delivery.
And the scale of commercial integration is what's really interesting here.
It's massive. JD Logistics, a huge commercial company, handles more than 60% of the PLA's online procurement. So you're seeing a nation inject cutting-edge commercial AI capabilities directly into its military supply chain.
Right. We also need to remember that AI's ROI, its return on investment, often shows up in the least glamorous places. A case study highlighted a startup called Akara. They're using AI and vision models to monitor cleaning protocols in hospitals.
This is the maturity story of the market, really. We're past the glossy consumer apps. The real money is made when AI can walk into a hospital and shave 20 minutes off the operating room turnover time, that idle time between surgeries. By solving that one logistics headache, they're finding real, tangible financial benefits that justify the high cost of these vision models.
Okay, so here's where the conversation about physical limits or power constraint really takes center stage. The AI boom has triggered a massive escalation in the global memory chip shortage.
This is a direct structural consequence of just insatiable data center demand. We're talking specifically about DRAM, dynamic random access memory, the stuff in our phones and laptops. Procurement costs for DRAM are projected to jump another 40% next quarter. And that's after a 50% rise this quarter.
And why?
Because the chip makers have pivoted production. They're all making high bandwidth memory, or HBM, which is the specialized high-margin memory used only in AI GPUs.
So because data centers are buying all the high-margin HBM, they're basically cannibalizing the supply chain for consumer devices.
Exactly. This is the memory wall in action,
Right.
a fundamental vulnerability in how we scale AI. The chips get faster, but getting data to the chips quickly is the new bottleneck, and it's now hitting consumer prices everywhere.
And the financial side of the AI giant, Nvidia, is drawing huge scrutiny. The company struck roughly $125 billion in AI-related vendor financing deals in 2025.
That figure is just staggering. It includes a reported $100 billion multi-year commitment just to OpenAI's infrastructure. The worry for investors is that these deals, where Nvidia is basically funding customers to buy its own chips, suggest the infrastructure for frontier AI is now so massive it can't be funded by traditional VC alone. Nvidia is becoming the bank for the entire industry.
Which raises all sorts of questions about sustainability and market concentration.
Absolutely.
It also seems Nvidia is strategically adjusting its position. Reports confirm they're reorganizing their cloud division, a strategic retreat.
Yeah, they're pulling back from trying to compete directly with AWS or Azure. They're pivoting their DGX cloud team to focus on internal infrastructure support for their customers instead. This ends a big cloud computing plan CEO Jensen Huang introduced over 2 years ago. It's an admission that their dominance lies in being the foundational layer for all cloud providers, not a rival to them.
Speaking of rivals, the TPU threat to Nvidia's dominance became a very real data point today.
Oh, absolutely. Reports that major AI labs like Meta and Anthropic are significantly expanding their use of Google's tensor processing units, or TPUs, that caused a dip in Nvidia's stock. Anthropic is reportedly buying 1 million TPUs.
Anthropic buying 1 million TPUs is huge, but let's be real, isn't this just about cutting costs? Is the power of NVIDIA's CUA software lock-in really being challenged?
I think it's more than a footnote. The scale of that order, 1 million units, it indicates a structural shift. The economic need to find cheaper, more efficient compute alternatives is finally strong enough to challenge that software lock-in that has defined NVIDIA's whole empire. The market is actively diversifying.
That brings us to the geopolitical power paradox. Investor Michael Burry issued a stark warning about the U.S. being at a structural disadvantage in the AI race because of energy.
Yeah, Burry argues that the U.S. focus on these power-hungry general-purpose GPUs puts it at a disadvantage against China. Why? Because China has significantly higher energy capacity. He highlighted a critical stat. China has more than double the electric generation capacity of the U.S. This allows for much faster, larger-scale AI deployment. His critique suggests the U.S. should pivot hard toward highly efficient, purpose-built ASICs to manage that power limit.
And to really solidify China's commitment to its own infrastructure, reports confirmed a huge state-backed Manhattan project for AI chips.
This is a really aggressive effort coordinated by Huawei. It aims to reverse engineer ASML's extreme ultraviolet lithography technology, or EUV. And EUV is that indispensable, highly complex tech you need to make the most advanced chips. If they succeed, this project would basically negate Western export controls. The target is 2028 to produce working chips. It just shows China's determination to clear that infrastructure barrier on its own.
So the constraints aren't just physical or financial. They're now deeply psychological and governmental. This is the policy constraint.
It is, and starting with maybe the most restrictive framework we've seen yet. China's internet regulator released draft regulations for anthropomorphic AI companions. They're now trying to regulate emotional interaction itself.
Wow.
This is the first comprehensive national framework specifically targeting emotionally interactive AI. The draft mandates safety checks, content alignment with core socialist values, but the most striking part is the measures against emotional dependency. It requires mandatory 2-hour usage pop-up warnings and forces providers to have minor modes. This is policy trying to manage psychology in real time.
And the risks of this tech moving too fast were echoed by Nobel laureate Geoffrey Hinton. He warned that massive AI job replacement is going to accelerate in 2026.
And when Hinton speaks, the industry listens. He noted that AI capability doubles every 7 months. That's a rate that just far outpaces our ability to adapt. And crucially, he warned that AI has improved in deceptive reasoning, which creates new safety risks. And this isn't theoretical. His warning is backed by data showing job postings have declined about 30% since ChatGPT first launched.
That's hard data.
It is a measurable consequence of this speed.
Back in the U.S., OpenAI seems to be trying to address these concerns. They're seeking a new head of preparedness.
Right, and this is a key role that focuses on mitigating catastrophic and chronic risks, cybersecurity, mental health impacts. The position has seen high turnover, which signals just how hard it is to keep pace with the model's complexity. Insiders are suggesting the biggest worry is that models are getting so good at computer security, starting to find critical vulnerabilities faster than humans can patch them.
On the regulatory front, South Korea passed a major AI Framework Act.
This sets up rules for what they call high-impact AI. So think safety-critical systems in finance, transport, healthcare. The law goes into effect really quickly, January 22, 2026. And the alarm bells ringing in the industry are about how vague the compliance rules are. Companies are worried that the heavy auditing and disclosure rules could stall R&D while they wait for bureaucratic clarification.
The political talk in the U.S. also ramped up. Senator Bernie Sanders called for serious consideration of a moratorium on new AI data center construction.
And this signals that AI governance is shifting from a theoretical debate in Congress to a resource allocation fight. Sanders cited environmental concerns and the prioritization of profit over workers. He even argued that AI infrastructure is creating a housing-like crisis in energy markets, diverting essential resources.
And finally, the EU continues its strict regulatory path. The Parliament-backed firm rules against algorithmic management in the workplace.
The call for regulation passed with a commanding vote, 451 to 45. That shows very strong political will. This policy requires human review for major workplace decisions, hiring, firing, and it explicitly bans emotion recognition tech in EU workplaces. It sets a really powerful and strict global precedent for oversight.
And the skepticism we're seeing in governance is definitely mirrored in the financial markets. Leading investors are divesting, fueling these AI bubble concerns.
This is critical investor psychology. SoftBank liquidated its entire Nvidia stake. That's about $5.8 billion. At the same time, Michael Burry, who famously spotted the 2008 crisis, placed significant short bets. They aren't questioning the tech's potential, they're questioning the math.
What's the accounting red flag they're seeing?
It's the hardware depreciation schedules. Burry cited concerns that firms are overstating their profitability by, stretching the expected useful life of this incredibly expensive, rapidly obsolete hardware. The money is flowing in, but the financial structure supporting it all might be stretched a little too thin.
Yet, Nvidia is still consolidating its dominance with aggressive deals. The analysis of its $20 billion Groq licensing agreement is a perfect example.
Yeah, this $20 billion non-exclusive deal is Nvidia's largest ever. Analysis suggests it was basically an acqui-hire disguised as licensing. Nvidia essentially absorbed key talent and technology from its rival, Groq, to consolidate its hold on the inference market.
It's leveraging its balance sheet to choke off competitors.
Exactly, through these massive, non-traditional deals.
Across the globe, we saw some key funding data, especially from India. Year-end numbers showed Indian startup funding hit $11 billion in 2025.
This reflects a really sharp market consolidation. The capital is now intensely focused on high-tier AI enterprises that are solving legacy IT system modernization. It's a pivot to sustainable cleanup operations, using AI to manage that necessary transition for global enterprises. A huge contrast to the speculative consumer app funding we saw earlier in the year.
And lastly, the Israeli M&A market recorded a record year, focused on very specific areas of AI.
That's right. The M&A activity was driven mostly by investors focused on AI and cybersecurity and defense tech. The demand for strategic AI solutions in those fields is so high that average company valuations in Series A and B rounds just shot up 43% and 35%, respectively. It reflects a global belief that Israeli AI startups provide this unique strategic security value that can transcend general market volatility.
All right, to wrap up our deep dive into this pivotal day, let's leave you with two powerful tools and two critical numbers that really define December 28th, 2025.
First, the tools. Christopher S. Penn released a new guide for unleashing AI with the command line. It focuses on embedding local LLMs directly into your system-level automation. And in India, the government updated its Skill India Digital AI for All curriculum to accelerate AI literacy across the workforce, a key national investment.
And now for the numbers of the day. First, 50%. That's the projected increase in consumer memory chip prices DRAM this quarter, driven directly by AI data centers swallowing up the global supply chain.
And second, 7 months. That is the doubling rate of AI capability, according to Geoffrey Hinton, a rate that is accelerating job displacement and regulatory risk far faster than our institutions or even the physical world can possibly adapt.
So, what does this all mean? The developments of this single day show that AI has moved. It's moved definitively from being a software challenge to being a physical and governmental one. When Titan investors liquidate billions of dollars because the electrical grid or standard accounting methods can't keep pace with the technology, it signals that 2026 will be defined by the hard structural limits of AI, policy, power, and psychology, not just the code. So the question for you is, how quickly can your organization shift? Shift from just debating AI potential to actively managing its complex physical and, well, its psychological requirements.